In the last few days, a lot has happened with Indian economy as well as Indian stock markets. The bigger question is, are we likely to see a massive bull run in Indian stock market right now or not? So I'm going to try and help and decode that answer. Also, whether you invest in mutual funds, ETFs or Indian stocks, this video is going to help you a lot because after a lot of big things that has happened in Indian economy, what's the cumulative impact of all these events? That's what we're going to discuss. If you're new to my channel, my name is Rahul Jain. I'm a SEBI registered research analyst, a content creator and a full-time investor. If you're new to my channel, subscribe to this channel so that you don't miss out for upcoming comments. With that, let me first talk about the recent India-US trade deal that has been signed off or rather announced, and US has reduced the tariffs, as we all know, to now 18%. Now immediately in the news you will hear that textile sector is going to give you better returns, this sector is going to give you better returns, but please be very careful right now. Why do I say that? Have a look at my screen. This is at the end of 3rd of February. The returns that you see already in some of these sectors have gone over the roof. For example, textile sector 12.67% up in just one day. Power sector 6.99, construction 6.28, shipping 6.25, auto ancillaries 6.11, metal ferrous 5.28%. Point is simple, by the time you watch this video, you do some research about these sectors and some stocks within these sectors, the chances are that there is not a lot of valuation comfort remaining in these particular sectors. So I would highly request you to not just go by what you are hearing in news in terms of what are the next upcoming sectors. Now coming to the day one performance of Indian stock market after US and India trade deal was announced, if you look at all the broad indices, for example, Nifty 50, Nifty Next 50, mid cap, small cap, micro cap, all have given 2 to 3% of run up in one single day. This is at index level. If you look at various sectors, for example, banking, IT, pharma, metal, energy, almost every sector had given a run up in the very first day. Now, which sectors are looking interesting to me? I'm going to talk about that in a minute, but more importantly, please understand that for us to see the massive bull run that can sustain, or at least some good rallies that can sustain, one of the big things that needs to happen is FIs need to come back to Indian stock market. Now, can the FIs come back or not? There are 4-5 good signals that are there. Let me try and give you 1 minute commentary on that. See, in addition to India-US trade deal that we have seen, if we just go back to 10 days, mother of all deals happened between India and EU. So this was another significant milestone in Indian economics. Why? Because this deal has been going around for almost 22 years. I think it started back in 2007, as you can read here. So this was the long outstanding trade deal that had to happen, and the timing couldn't be any better for FIs to come back in my view. So India-EU deal ticked. India-US deal ticked. Thirdly, let's also speak about budget. On 1st of February, budget was announced. There was a lot of hoo-ha about STT. Even that day also I created a reel and I said to you guys that I don't think STT is going to drive the markets down. Why? Because FNOs have become a business. It's speculation, it's addiction, it's the sattebaji, it's everything right now, and I don't think you can keep the participants outside this FNO market. There may be marginal impact on volumes. Of course, we'll get to see that, but my view is very simple that budget was very positive from a long-term structural reforms perspective. Again, I'm not talking about middle class income tax perspective or whatnot. That is not the point here. From a stock market perspective, from a growth perspective, from economic growth perspective, it was not a bad budget, given the fact that we have seen two big reforms outside the budget. Which are those two? One of them is the GST reforms 2025. If you look at sectors like, for example, two-wheelers, small cars, TVs, ACs, cement, huge relief, 28% to 18% GST cut. And moving to two-tier GST system, absolutely fantastic in my view from a long-term perspective. Also, let's not forget that income tax slabs were last year only reduced to 12 lakhs, which is again a very good move by government from a consumption boost perspective, right? So these 5 things have happened. Number 1, India-US trade deal signed off. India-EU trade deal signed off. Budget announced. Now we know what the policy is likely to be. Again, I'm going to talk about that, some of that in a minute. But third, big tick. Fourth one, GST reforms already started, and we have already seen that GST revenues have not dropped. If you go and read the data, nothing bad has happened. In fact, it has rationalized the GST structures and it will make it easier for businesses to operate. Operations are very important. And last point, the income tax relief that we got last year. These 5 events are very big events. And the question is now, are these 5 events big enough for FIs to come back? Let me give you 1 minute of perspective now. Why am I focusing so much on FIs return? because data is telling me screamingly that until FIs come back, we are not going to see sustained rallies in our Indian stock market. Have a look at last 10 years of data and see how much of money FIs have either poured into Indian stock market or have taken out of Indian stock market, and what the nifty returns are. For example, 2025 has been the single largest year where FIs have sold the biggest amount, 1,65,000 crores. If you go back to history, you will see that FIs have never sold this much of amount that they did in 2025. Why did they do it? I'm going to talk about that in a minute. But see, Nifty gave us 10.51%. You will say, Rahul, this is a good return, 10.51%. Agree with you. This is a very, very good return given the fact that they sold so much. How come we manage this decent return? Because of SIP inflows. But if you look at, for example, 2022, when they sold around 1,21,000 crores, Nifty only gave 4.32% because at that time SIPs were just starting. If you go back to 2018, when they sold around 34,000 crores, Nifty only gave 3.15. And look at other side of the story. In 2020, when they bought around 1,72,000 crores, Nifty was almost up by around 15%. Look at 2023, 1,76,000 crores is what they invested in Indian stock market. All-time high in the last 10 years, it gave 19.42% returns. Point is very, very simple. The only way we can see a sustained rally, a good bull run in Indian stock market is dependent on FIs return to Indian stock market, and that is what data is telling me. Now you will say that, Rahul, can FIs actually come back? So the 5 points that I talked about, they are all very, very positive. Here are two brokerages. For example, one of them is saying is that Nifty's EPS growth is projected to be around 14% in this year, right? So that's a very, very good number to look at. Motilal Oswal also says that around 12% earning estimate. These are all estimates, right? And if that happens, we are going to have a forward PE valuation at around 20.4, which is very, very good, and FI should come back. Please understand, this is for the entire year projection. We are just getting started in the month of February, so we might not see an immediate return, but what these guys are talking about is that throughout the year, it is entirely possible that we may start to see FIs come back. Now, a few reasons why FIs have been away from Indian stock market. See, one of them, we all know that the capital gain tax was raised and it went up to 12.5%. That makes Indian stock market less lucrative, but this is a government's policy. I don't like it personally. I mean, you and me are paying now huge long-term capital gain tax. We being long-term investors, we are paying 12.5%, right? Very few countries have this much of high capital gain taxes, but this was one of the reasons. Now, this cannot be reversed back. Okay, so this does remain a negative for FIs to come back. Second big problem is rupee depreciation. Because rupee has been depreciating, it impacts FIs returns directly. Whenever they take the money out, they're going to get impacted. Now, because of India-US trade deal, this definitely can reverse if rupee appreciate. Okay, if the rupee, let's say, go to 88, 87, 86, slowly it starts to come back, then definitely it becomes a better market for foreign investors. And lastly, valuations. If we look at MSCI India, which is an index that represents large cap and mid cap companies in India put together, forward PE is looking like 22.41 as of December 2025. We are still costlier than many emerging markets. If you see, emerging market is only 13.48, but we are growing faster than the emerging market. That is another point that we need to remember. Therefore, yes, valuations are still on the higher side from a large cap and mid cap companies perspective. This is not, by the way, Nifty PE. Okay, this is large cap plus mid cap. But point is that, is this valuation enough for them to come back? Given the history, I don't think it's a stretched valuation. In fact, if you look at 2025, MSCI India only delivered 9.49, while emerging markets delivered 41%. So there is a chance that the money might rotate from other emerging markets to India. Therefore, FIs may come back to India. Now, to conclude this segment of the video, I personally feel like all these 5 big events that have happened, they are all positive directions for stock market to give us a sustained rally, but it all depends on FI's return, and I don't know whether FIs will come back or not. There may be other reasons for FIs to come or not come back to Indian stock market, but as an investor, in my view, whenever markets are down, this is where I particularly invest. Okay. Now, if you're a mutual fund investor, what should you do? For example, have a look at this particular large cap fund. Again, not a recommendation here at all. I'm going to pick few random mutual fund examples so that I drive home my point. Okay. This one large cap fund, what you see is that from all-time high, the NAV is very down as of now when I am recording this video. Why? Because markets have been down and these are now at discount, 5% off almost, right, from all-time high. Could this fall further? Yes, absolutely it could fall further. It's not that it will not fall further, but the idea is that do you have the courage to buy when the markets are down, right? Another example I can give you, for example, this mid-cap fund, for example, this is even down further. 121 used to be the NAV, right? It's now at around 105 or 106. Again, I don't know when you're watching the video, 15%, 16% sort of a down is what we are seeing in the mutual fund NAVs. If, of course, you go and look at your portfolios as well, right? Another example I can give you, small cap mutual funds, very down, 285 NAV, for example, at all-time high. It's now at around 256, right? Are these opportunities? Well, it is up to you to decide, okay? For example, I took some bets in mutual funds. 7 days back, I've written this post in my community on YouTube. I've invested good money in mutual funds, as you can read it here. And in fact, I did mention this point here that the day US-India trade deal sign-off happens, we should see market in a positive direction. And that's what precisely has played out today. People who put money earlier, before when the market was down, they're going to sit and enjoy this rally now versus now trying to figure out where do we put the money. That was the best time. The next best time is today because markets have still not recovered fully. There's still a lot of pockets in the market that gives you opportunity, provided you are a long-term investor, you know where to invest. And if you want to learn these things practically, please feel free to join my YouTube community. It's an exclusive community. I try to post almost on a daily basis. I don't share where you need to invest. I share the insights and that makes you an informed decision so that at least you have the information that allows you to make good decisions. So that's on mutual funds. Also, if you're an ETF investor, then what do you need to do? Go and watch this video I've recently created on my English channel. You will learn a lot about ETFs. Okay, I've explained 5 ETFs, what their compositions are, what their past returns have been, what their valuations are. Learn about these ETFs so that whenever there is an opportunity, you can consider investing in these ETFs whenever the opportunity emerges. Now, coming to the top 3 sectors right now that I particularly like for 2026. Again, it's not just about the export oriented sector, but overall, I really like auto sector, auto ancillary sector as of now. Why? Simply because there is a big GST tailwind behind this particular sector. Okay, 28% to 18% rate cut makes a lot of sense for people to buy auto. And also, if you look at the recent results that have come out, January 2026 data here, for example, let's look at Tata Motors. Their sales, passenger vehicle sales is up by 47%, right? This is all happening because of the auto GST cuts that we have seen, okay? Have a look at, for example, Mahindra and Mahindra. Their SUV sales are up by almost 24%, right? I know Mahindra and Mahindra has been growing at this rate even prior to GST because of the SUV demands, right? But if you look at, for example, other companies, Maruti, for example, if you look at, not huge growth rate here, around 11%, 2,12,000 to around 2,36,000. Overall, if you look at all these companies, for example, if you look at Maruti Suzuki, Tata Motors, Mahindra, Hyundai, Toyota, all of them have delivered 2-digit growth rate in January 2026. Could this momentum continue? In my view, yes. Of course, there is a slight risk coming from India-EU deal because there, from European cars perspective, import duty will get reduced slowly, but it's not going to happen immediately. Keep an eye on that in terms of what the timelines are for that particular change. But as of now, if you ask me, January 2026, it's more sentimental play rather than fundamental play. It will play out in the next few quarters, but not immediately. I still feel auto sector for 2026 still looks very good to me. Also, have a look at two-wheeler. For example, Hero MotoCorp. What were their sales growth in January? 26%. See guys, you are looking at stock prices and I am looking at the sales growth rate and profit growth rate here. Okay, this is how we go to read what's happening in a particular sector. And if you aggregate these sector level findings, you immediately see that GST's impact has started impacting the sales positively and it is likely to be there for a few more months. And until then, you can build positions in auto sector if you like. Another two-wheeler company, TVS Motors, 29% growth in January 2026. So I remain bullish on auto sector. Auto ancillary sector also should be now added because of the India-US trade deal, because a lot of auto components are exported to US. The second sector that I really like in India, and I've been talking about this on my channel a lot, is data center theme in India. In the budget also, you would have heard that we have got a tax holiday for companies, global companies that are going to deliver data center services through Indian partners to any global companies. Okay, and that tax holiday is up until 2047. Now there are finer details that I need to read on that, but overall I remain very bullish because it's not just about the tax holiday. This sector is definitely forward looking sector. So if you're looking for a long term, mid to long term sectors like like 2030. These are the sectors that you need to look at. Data centers. I created a full video on my YouTube channel on data center sector. I'm not going to repeat it here. The video is still out there. It's barely 1 month old. Please go and read about it. The announcement that our FM made in the budget, it was actually in the draft policy that I'd already covered a month back. Okay, it has come to people only during the budget that data center theme is going to pick up now. Of course, they were waiting for formalization to happen, but there was a draft policy already that I covered in this particular video. So second sector for me is data center, remains a very, very hot sector. Third sector that I really like, which is almost evergreen as of now, is banking, capital market and financial sector. Okay, irrespective of what happens to India-US trade deal, this sector is driven by India's story. And since we have done so much in the past few months, the story remains very, very good. For example, companies like Jio Finance, again, not a recommendation here, but if you look at their numbers that just came out in January 2026, look at the sort of business they are building now. Okay, 354% growth in their NBFC AUM, right? They're building their business, right? Look at payment solutions, 156% YOY growth, for example, right? But if you look at the valuations of Jio Financials, if you look at the profit to book ratio, it's come down from median. Okay, it is now at around 1.1 versus median PB of 1.4. In Jio Finance, you don't look at the PE ratio because the earnings are very, very low as of now. Doesn't make any sense. Price to book is what you need to look at. Again, I'm not saying that invest in Jio Finance. I'm saying that there are opportunities from a valuation perspective where the earnings growth is decent, or rather the business is building, and the valuations wise, there is a comfort. It's not that the valuations are over the roof that we used to see in the bull run, right? Another example I can give you, for example, ICICI Bank. Have a look at ICICI Bank's PB ratio in the last 10 years. Median has been around 2.8. Right now, it is trading at median PB only, right? And if you look at how the fundamentals have improved of this bank, amazing story that you go and have a look at. In fact, 2 weeks back, I wrote detailed commentary about ICICI Bank's quarterly results that came out. And since the company made a decline in their profit, 4% decline in their PAT, people were worrying about ICICI Bank. And I was telling them that company has made a huge provision, okay, in their P&L. That's why their PAT has declined. Why? Because RBI had asked them that you have to meet minimum standard asset provisions, and they gave some 12.83 billion figures. And that's why the profitability has impacted. That's why you don't look at the PE ratio for banks, because if they make provisions, the profits look bad. But it's not that they are bad companies as such, okay? These provisions will be rolled back at some point in time in future. But just because people saw 4% decline in their PAT, as you can see on my screen, people were worrying about it. The valuations were coming down for ICICI. And that's why precisely I say that if you understand whether a drop in the profitability is significant or not versus the valuations, then it helps you make that decision. Right? Another example I can give you, Motilal Oswal Financial Services. Again, none of these are recommendations, guys. I'm just sharing some Q3 numbers that have come out. Their profitability, if you look at, it's grown at around 16% on a standalone basis. And if you look at consolidated basis, where you include the treasury gains as well, it's around 58%. I mean, company is growing at a very, very rapid growth rate. And if you look at the valuations, they are fine. I mean, they are not like hugely overvalued. Of course, the valuations are higher, like if you compare last 5 years or so, but overall, if you see earnings growth in a company, right, and if you see the valuations are reasonable, and this is a judgmental call that you will have to make, then I don't think you should be shying away to build positions, especially when the markets are down, because the sentiments are down, and that's where you find good companies at reasonable valuations. And now I don't know what will happen to Indian stock market, whether we see a rally or not, whether this rally that we have seen will sustain or not. But as of now, if you look at the broader 5-6 points that I covered in the beginning of the video, signs are that it is looking very, very positive, right? Now, even after doing all of this, if FIs do not come back, if the markets do not rally, then it's okay, because we are not, at least I'm not investing in stock market for short term, for 1 month, 2 months, 3 months. Okay, eventually at some point in time they will have to come back. Why will they have to come back? Because at some point in time valuations will make so much sense that they will have no choice. They are there to make money, and if they see an opportunity in India to make money, they'll come back. Nobody can stop them, right? It's a free investment world where if you see an opportunity, you go and invest in that company. Anyways, in this video, I've given you a broad view of the major events that have happened. You can of course go and drill down in any of these events. I'll try and get you some more details around India-US trade deal in terms of exact sectors, etc. If you want, let me know in the comments. If you like this video, request you to leave a comment. Just say thank you, and it motivates me a lot to bring you such content at zero cost. You can consider joining my YouTube community if you practically want to learn, because I share practical insights without giving any investment recommendations or tips. I just share insights that help you build better decisions, better thesis, and better investment skills. With that, I hope to see you in my next video. Until then, keep rocking.